Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 23rd, 2025, and we're diving into AutoZone's fourth quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. AutoZone, a leading retailer and distributor of automotive replacement parts, has just released its Q4 2025 earnings report, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. AutoZone reported net sales of $6.2 billion for the fourth quarter, which is a 0.6% increase from last year. However, when adjusted for the additional week in the previous year, sales were up 6.9%. John, what does this tell us about AutoZone's performance?
It indicates a solid performance, especially when considering the adjusted figures. The same-store sales increase of 5.1% is a strong indicator of organic growth. However, the gross margin decreased by 98 basis points to 51.5%, primarily due to a non-cash LIFO impact, which affected profitability.
And how did this impact their operating profit?
Operating profit decreased by 7.8% to $1.2 billion. This decline is largely due to increased operating expenses, which rose to 32.4% of sales, driven by investments in growth initiatives.
Earnings per share analysis. Analysts had forecasted an EPS of 52 cents, but AutoZone reported an EPS of 48.71, a 5.6% decrease from last year. John, what are your thoughts on this?
The EPS came in below expectations, which is a concern for investors. The decrease is attributed to the lower net income and the impact of the LIFO charge. Despite the sales growth, the profitability metrics didn't quite meet the market's expectations.
Strategic initiatives and market expansion. AutoZone has been expanding its footprint aggressively. They opened 141 new stores this quarter, bringing the total to 7,657. How does this align with their strategic goals?
AutoZone's strategy focuses on expanding both domestically and internationally. The 7.2% same-store sales increase in international markets on a constant currency basis highlights their successful penetration in these regions. This expansion is crucial for capturing market share and driving long-term growth.
CEO's perspective and future outlook. Phil Daniele, AutoZone's CEO, expressed satisfaction with the sales growth and momentum heading into the new fiscal year. What are the key takeaways from his statement?
Phil Daniele emphasized the company's focus on growing market share through store expansions and strategic investments. The $1.5 billion investment in share repurchases also signals confidence in the company's future prospects and commitment to delivering shareholder value.
Key takeaways. In summary, AutoZone has shown robust sales growth and strategic expansion, although it missed EPS expectations. The company's focus on market share and shareholder value remains strong. Thank you for joining us, John.
Thank you. It's been a pleasure discussing AutoZone's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on AutoZone's performance in the comments below.